Coming up on Finance and Technology Insights today, we're talking about tech stocks and tech funds. Who are the winners and losers? Brian goes into detail on that, and I kind of lose my stuff on ChatGPT. We talk a lot about ChatGPT, so exciting stuff coming up. Hi, my name is Eric Buhrendorf, and I'm one of the hosts of Finance and Technology Insights, a podcast dedicated to exploring the intersection of finance and technology. I have a background in both industries and am excited to share my insights and experiences with our listeners. In each episode, we invite experts to join us and discuss the latest trends and developments in the world of fintech. Whether you're a finance professional looking to stay up to date on the latest innovations or simply interested in how technology is transforming the world, our podcast has something for everyone. So join me and my co-host, Brian Williams, as we delve into the exciting and constantly evolving world of finance and technology.
Well, I figured since it's the end of the year, we could get into, since our show is finance and technology, I thought I'd kind of give an overview of the last year or so in the markets and how it's related to technology. So just sort of looking through the field of technology stocks and ETFs and mutual funds. So you'll get a kick out of this. The worst performing exchange traded fund. This is just in the technology sector. Any guess on their focus of the fund? Like what type of businesses they invest in? It's pretty specific.
Okay, this is fun. I like this.
Yeah.
Well, I mean, this sounds like a crypto trap, but I'm not. But so this is a technology ETF or an ETF, a technology fund.
Yep. With
And
a narrower focus.
and
It's
you're
in the
asking what
technology category, but a narrower focus.
and what narrower focus took a nosedive.
Yeah.
Well, I not knowing what the categories are, I know social took a beating,
Mm.
and transportation took a beating, especially Tesla stock is down, I think 60% for the year.
Yeah.
So, am I close?
Yeah, you're definitely on the right track, and your guesses are certainly of the top worst performers, but the worst performing. So this is a 1-year number through the end of November. So end of November 2021 through the end of November 2022 is the Simply Volt Cloud and Cybersecurity Fund. Believe it or not,
Wow.
down a whopping 68%. The next two worst performing funds are two ARK funds, which we've talked about before, Kathy Wood and her aggressive allocation. So next generation ETF, which was, kind of metaverse and social. And then her fintech fund was down 65%.
So talk to me about the top one that you mentioned.
Yeah.
Cybersecurity obviously is my my ears perked up when you said cybersecurity.
Mhm.
I can only guess what the brands are that make up that fund. Is it the typical players, McAfee, Symantec, or is it some other smaller outfits or lesser known companies? Does it give you a
It's
rundown?
a little bit lesser known to me. Well, I don't know. It's a pretty good mix. So you've got Palo Alto Networks,
Oh,
Cisco are number 3 and 4,
mhm.
Cloudflare 5. Is it pronounced Zscaler?
Okay.
Um, CrowdStrike, VeriSign's a number 9 holding. Just flipping through the stuff I know. Infosys,
Okay. One of my very
Juniper.
good friends is a VP or was a VP at Palo Alto. I just saw
Okay.
him at my daughter's birthday party this weekend, and he said that he has tendered his resignation. He's moving on to a startup. So that, I don't
Oh,
know
there
if
you
that
go.
wonder if
I
that's
hope that's
related.
public information. Maybe not.
Brian, if you're
What else
watching.
we got in here? We got Juniper Networks as a number 17 holding.
Okay.
VMware. So those are. But yeah, that composition made up the worst performing ETF over the last 12 months through the end of November. So I thought that'd be interesting to lead off with, since obviously you're a cloud and cybersecurity guy. The two funds that most people think of in terms of if they want to focus on on IT and just general technology. QQQ, they advertise a lot, and that was, if you go back 20, 25 years, that was always the hot day traders, always trading the cubes or the Q, or and that's gone through some symbol changes and some name changes, but QQQ is alive and well, and that represents the stocks that are traded on the Nasdaq.
Right.
So even though it's a technology focus, the weighting, you've got Pepsi as the number 9 holding, so you've got some stuff in there that you might not necessarily think of as being technology firms, although to
Do you have
some
any charts you can throw up? Do you have any charts in front of you?
I could. I'll just throw up what I'm looking at here. It's not super exciting. This is
Oh yeah,
pretty
there you
raw.
go.
Yeah, this is pretty raw Morningstar, deep in the weeds stuff. But
All right.
so this is a program I use called Morningstar Direct, which is kind of funny because it's really more of like an institutional level product. There are very few solo advisors, if any, that have this, but I'm just such like a ridiculous data nerd that I almost have to have this. So
I love it.
but so anyway, so you've got some stuff in there. The other fund people use a lot is the Vanguard Information Technology ETF, and that is more pure technology. So what's important to note on these is the weightings, especially in the Vanguard fund. They're market cap weighted, so the bigger companies are going to make up most of the index, which makes sense, I think, if you're trying to gauge the overall performance of the market, because obviously Apple. So in the Vanguard fund, Apple is 21%, Microsoft is 17%. So those two stocks are making up 40% of the index. So their performance is directly going to have a huge impact on how much this overall ETF trades. And then it drops off significantly from there. Then you got Nvidia, Visa, and MasterCard are only 3 or 4%. So so those market cap weighted indexes, and QQQ is like that too. Its number 1 holding is Microsoft, number 2 is Apple, at 12 and 11%. So so those performances are going to be tied to those. So when you hear it's been a rough year for technology, most people are looking at either the QQQ or a technology index, but so much of that is based on the performance of Apple and Microsoft. So Apple last year's down, over the last 12 months, down 22, and Microsoft down 24%. So
Which is pretty good considering the market, right? The market's about down 20%, isn't it?
yeah, exactly. And then when you say the market, you're talking about the S&P 500, which top 2 holdings are what? Apple and Microsoft.
Oh, okay, that's your point.
Yeah, so they've been such a big, I mean, obviously not the weightings that they would have in a technology area, but yeah, still pretty big holdings there. But what's interesting is if you start to peel away from your sort of big cap tech funds, and you look at the other fund I'm looking at here is the Invesco S&P Small Cap Information Technology Fund, which is over the last year. So small cap. So it's
Are you
staying
looking at a
away
screen?
from,
Do you have any visuals you can throw up?
not really that are going to be that exciting. They won't
All
really
right.
translate too well, unfortunately. But so PSCT is a ticker there. Only, I say only, down about 11%. So really the technology that's faltered and the stocks that have faltered has really been at the large end. I mean, obviously Apple and Microsoft, but then you've got performances from Meta, and Amazon's down 50% over the last year. And
Well, Amazon's down 50 for the year.
Netflix too. They're down pretty big. So small cap's an area that hasn't necessarily performed as poorly as big cap, because big cap is just, again, pulled down by those larger companies. Another area that's actually positive over, down about 4%, but is like the dividend players. So these are companies that a dividend, just to way back it up, a dividend is when a company earns money, they can do one of two things. They can either reinvest it in their business, through hiring people or for research, or they can take those profits and they can pay them back to shareholders. And if you own the stock, you're a shareholder. So when you receive your dividend, you're getting a share of those companies' profits that they decide to distribute. So typically dividend players, because they're not reinvesting that revenue, the profits back into the business, they're not growing as quickly as ones that don't. So big picture, stock market wise, your dividend players are going to be utilities, they're going to be banks, they're going to be insurance companies who generate a lot of revenue, but they're not
Mature
necessarily,
business models.
yeah, they're not necessarily, investing heavily in technology, although you could make a case that maybe they should be. But so that's so when you're looking at technology players that issue dividends, it's a little bit of a rarity, but you do have some in there. So you got Intel, which pays about a 5% dividend. If you throw Visa in there, they pay a little bit of a dividend. You've got Intel. But overall, these type of companies have performed better than sort of your top heavy. Even though Microsoft pays a dividend, it's only about 1%, and Apple pays a tiny bit of a dividend too. But the companies that have been distributing a share of profits in the technology space have performed better than the ones that haven't. So which is pretty par for the course when you got a down market. People are going to look towards income. You're going to look towards that dividend because they view that as, they like getting that dividend every quarter. They like seeing that, deposit in their bank account or in their brokerage account. Whereas another company that might be earning even more money and reinvesting it, you don't necessarily see that as a line item on your statement. So I thought that was kind of interesting. So when people say, well, tech's been beat up, yeah, big tech has been beat up, but small cap has actually done pretty well. And the dividend payers have done pretty well this year too. So,
What's the tax implication of a dividend?
yeah, so dividends are taxed at a lower rate than capital gains. So if you buy a stock for 100, you sell it for 200, or let's say you sell it for 150, your gain is $50, and there's long-term and short-term capital gains. They want long-term capital gains. They want you to hold your stocks long-term. So those rates are lower. Short-term is ordinary income, and then dividend about 15%, I think, is a dividend rate. So,
But isn't that cap gains? Isn't cap gains at 15?
Short-term cap gain or long-term cap gains. Let's see. Yeah, it's 0 to 20% depending on your income. So, a lot of people like those dividends. They use them in their IRAs and stuff, so they don't have to pay. They're not paying the tax every year because you don't have to pay the dividends inside an IRA or 401k. So,
tell me about the stock equities compared to treasuries and how that compares in the market profile today.
Yeah, I mean, so one interesting thing that's really happened in the markets over the last 12 months is the rise in treasury rates. So treasuries, in its simple terms, is you are loaning money to the government, and the government is paying you a set interest rate back. So under a normal, we'll say, yield curve, what's going to happen is if you loan the money to the government for 3 months, they're going to pay you a really small interest rate. If you loan the government money for 30 years, they're going to pay you a higher interest rate per year. So that's what's considered a normal yield curve. And it kind of slopes up usually to between 5 and 10 years and then sort of flattens out. But what's happened is short-term rates have really shot up. So now you loan the government money. Well, we'll pull up an actual number here because we'll actually give you some live numbers here. But so if you loan the government money for 6 months, they will pay you 4.7% interest. Whereas if you loan them money for 30 years, they'll pay you 3.7% interest.
That's interesting.
So, yeah, so that's considered a bit of an inverted yield curve because the short-term rates are higher than the long-term rates. So
what does that imply? Is there anything that you can infer from that?
Yeah, usually that a recession's coming. That's usually a sign on an inverted yield curve. But what that also does is so when we talked about the dividend players, people are looking at, people who wanted that income. They might say, well, I'm going to buy, let's see, IBM because it pays a 4% dividend and they like getting that. Now, suddenly when you can loan money to the government for a year, which is about as safe as you can get, and they're going to pay you 4.7, then owning that stock IBM doesn't look as attractive. So typically when short-term rates start to rise, the dividend players.
Wow. So there can be an exodus from the stock equities to the bond market.
Yeah. Yep. Could be. So
which
I've
would
seen a
which
little bit
would
of that here in the fourth quarter. Now the rates have gone up, but people still like that income, and it hasn't been as dramatic as you might think. But it's interesting that the treasury market, it's one of those things where it's like something people in the industry really follow, but um, people
it's
out on
less
the
sexy,
street,
right?
yeah, and people are more concerned with the borrowing side of it. People are always talking about mortgage rates, and I'm in a bunch of these networking groups, and you have the realtors and the mortgage lenders, and that there's so much of the economy that's tied to the housing market, so they're always talking about the rates going up. But there is a positive side to rates going up, right? And that's good for savers and investors, or not necessarily good for borrowers. So I think we're just getting back to sort of normal yields. I don't think anybody would consider these high yields or high, borrowing rates. Just getting back to some sort of normalcy, which I think is good.
So let me just, as the layman's
Yeah,
investor here, if can I keep tagging you with some questions?
sure. Yeah, I'll try to answer them.
So I want to explore the relationship between the bond market and the stock market. Are they uh, they're essentially competing entities for investors, right?
Yeah, and what's interesting is you've had typically when stocks go down, people will fly to bonds for the relative safety. So usually when stocks are down, bonds are up. That hasn't happened this year, and it's when you consider a 50-50 portfolio, it's pretty much been one of the worst years since going back to like the 1930s. So um, in a year when the overall bond market is down 10-11%, and the stock market's down close to 20, it's been kind of a painful full year. And the reason for that is you're starting. So remember, the price works the opposite of interest rates. So as interest rates go up, the prices of bonds go down, because if you bought a bond a year ago that was paying 1% interest, well, who's going to buy your bond now? Nobody wants to buy your bond now, because they can get new bonds that are paying 4.5. So the price of your bond is going to go down. And that's what's happened this year. Is the new issues have come out paying a higher yield. It's made the previous bonds look less attractive. So bond market's down, stock market's down. But for new money coming into the bond market, it's one of the better times in the last 15 years or so.
Right. And so where do you trade and acquire bonds with your brokerage?
Yeah, so you can do a few different things. You can buy bond exchange traded funds, which trade throughout the day. You can buy bond mutual funds, which trade at the end of the day. If you want to try your hat at individual bonds, you can usually log into your Vanguard, Fidelity, Schwab, TD, whatever, and buy your bonds individually that way, which I think is okay if people are buying treasuries, if they understand what they're doing. When you get into buying corporate or the debt of a company, that can be challenging, and probably should leave that to a professional, especially if you're going out on the risk curve. But yeah, you could buy individual bonds if you know what you're doing through a regular brokerage account.
How did Grandma buy me bonds for my birthday every year? How does she do that?
Yes, she'd go to the bank and get savings bonds through the bank usually, or go right up to the teller window.
Is that
Um,
is that a government bond in the same sense, or is that like a bank product?
Yeah, I mean, there's different. So you had zero coupon bonds, which were efficient, because what would happen is you would buy that bond at $60, and in 15 years it would have a set maturity date of $100. So so they didn't pay regular interest, but they just increased in the value. And depending on where interest rates were, if it's in a low interest rate environment, you might be buying it at 70 and it turns into 100. If rates are really high, you might be buying it at 40 and it turns into 100. So that's another thing. Sometimes we run into people who've got these old savings bonds or whatever, and they assume that they're continuing to accrue interest. And a lot of times
They've already
they've already
matured.
hit maturity, and that's all they're going to get. So we get those cashed out and whatever. But
Interesting.
I don't think people do that as much as they used to. And then of course you could get bonds that pay the coupon, but a lot of them were zero coupon bonds through the
I
bank.
just, I just keep hearing the term bond matures, collect $100. Is that
Yeah,
that was
they
a
show.
Monopoly card, I think.
Yeah, Monopoly. Yeah,
That's
yeah.
funny. All right. So, last comment about the markets that I'll make. Again, I can't help, and maybe it's because I'm still in the gut of my earning years, but
Mhm.
I still can't help but look at a down market as a good thing.
Sure.
What
Yeah.
how do you respond to that?
Oh yeah, 100%. I mean, even people that the group I really feel for over the last year or so, and again, it's relative. But if you're somebody who retired a year ago,
Right, you're
and
divesting and exiting, right?
yeah, and suddenly, and you thought bonds were safe, you said, "Oh, I got my bonds, I got my stocks, and when stocks are down, bonds will be up and whatever." Now, suddenly everything you own is down. That can be uncomfortable. But if you're retired at 65, you're not going to spend all your money by 66. So
Right,
you're
right.
still, I mean,
And you've been
longevity,
investing in the market hopefully for the last 40 years, so you've
right?
already made you've made hopefully the significant amount of gains, right?
Yeah, yeah, and you know that some of the money you have invested at 65 has to last another 40 years maybe. So that's the group and it's more of a mental thing than a number thing.
Right.
Um,
If
but
I guess, like, if God forbid you're terminal and you just retired, you have a terminal illness or something, then there are probably individual scenarios for people that may be really uncomfortable in the down market like that.
yeah. Yeah, no, definitely. But even still, I mean, your 60/40 portfolio is, maybe you're down 10-12% this year. It's not the worst thing that's ever happened. So, um, but
If you have the proper guidance and advice of a financial planner, right?
yeah, yeah. I mean, hopefully,
You're not in a risk profile at 65 years old, right?
right, right. Yeah, I mean, yeah. Everybody's risky until you have a down market, right? So,
Right.
if anything, it's made people readjust. You hope they don't overcorrect and say this is terrible. I'm never investing in stocks or bonds again, and I'm just going to put it in a savings account at my bank. Yeah, I mean, so young people, it's a good opportunity. They're continuing to buy in each paycheck, and even people who have been. I mean, if you've been retired for 10 years, even with this year, it's been a very good 10 years. Even 5 years, it's been a very good 5 years. So
Well, it's
you,
certainly been a good 2 years, right? Or with
yeah,
the
I mean, well, yeah,
exception of this year.
2020, 2021 were very good years. So,
Right.
in essence, a lot of those gains were pulling returns forward, right? So, which you kind of knew at the time. You knew at some point you'd have to pay the price for those big gains during.
Right. I mean, everybody knew. I mean, not everybody. It seems, I don't know. I'm now approaching 40. I feel like I've now seen a couple booms and busts or
Mhm.
cycles, or I mean, boom and bust is probably an aggressive terms to use, but really just cycles, right? I mean, they're
Right.
market cycles. What goes up must come down, right? I mean, it's just, this is what I've said so many times on the show, where it's just a naturally occurring market is up and down, right?
Yep.
And
Yeah, it's a healthy market, right?
it's right. But yet, when we're in the boom, everybody's getting rich, and everybody's got the swagger. But then when the market downturns, I can't. I mean, tell me if you see this too. But in the news, and the media, I would say the mainstream media, if you will, like, does it seem like they're just looking for the villain, right? I mean, is that like everybody's
Oh
looking?
yeah, for sure. Yeah. Yeah, I mean,
Nobody goes like, "Yep, this is a good, healthy function of the market." And if you're still in your earning years, buy the discounts on the way down, right? I mean, that's
Mhm. Yeah, absolutely. I mean, certainly, we our favorite news networks and tech and finance networks. I mean, they want the big headline, the big red number. I mean, their
drama.
ratings are better when the market's bad. So, you know, and
But
they have to come up with a headline, which is always funny.
but
Market
there's
down
this sense,
500 today.
yeah. But there's this sense, watching CNBC. Like, now again at 40, I've been watching CNBC. Definitely in my periphery in my 20s, but it's been getting closer and closer, to center stage, I guess, in my media viewing over the last 10 years. But now I'm taking my experience in a couple market cycles, and I'm like, you guys don't know what you guys don't know any more than anybody else necessarily. I mean, sure, they may have more data because they're pouring through the data, but when it comes to what the price will be tomorrow or in the next minute or next week, they don't know any more than anybody else.
No, no.
You
And
know?
there's a let's see if I can.
And what's fascinating to me, I guess the point I want to make is, Jim Cramer, who has his Mad Money, who is supposed to be one of their experts, like he's made repeated apologies before about getting stock calls wrong.
Yeah.
And analysts, I watch a few YouTubers who talk about the markets, and they, YouTubers are funny because they are beholden to no God, and so what they're able to do, and YouTubers are incredibly resourceful, and a couple, I won't mention them, but a couple of them have pointed out and shown clips of where these analysts have been invited to CNBC to talk about a stock on the way up as if they're a subject matter expert. And then
Mhm.
when the stock goes down, the show keeps bringing on the next subject matter expert, but they don't mention the person that
Right.
they had 3 months ago that was completely wrong in their call today.
Mhm.
And
Right.
I just look at CNBC, for example, and most of those new TV news analysts or TV market analysts, and it's like, you guys, forgive me for saying this, you guys don't know shit.
Yeah.
Or
No, I
the
know,
or
and it's in I guess a little bit of a defense, but not really. I mean, you want analysts who are going to come on and give you that bold prediction, right? I mean, they're in the ratings
the
business.
bold
Nobody's
prediction.
gonna come on and say, "Well, I expect IBM to be up 4% in the next 12 months." I mean, nobody cares.
Right,
You need to come on and say, Coinbase is going to double or Coinbase is going to zero. That's what gets
right,
ratings.
right,
So
right,
I think there's a little bit of pressure on those to bring in the Kathy Woods. I mean, she's a good example of somebody
right.
who's
Perfect
become a rock
example.
star by, but if
Yeah, she
you're,
was a rock star through 2020, but now she's fallen on her face.
yeah, yeah, rock star is probably not the right word, just a media, it's always
Darling,
her
right,
fund is up this much or her fund is down. The polarizing figure, I
right.
guess, is probably
But
the
I
better
but I
term.
still don't have that energy. Like, I feel like CNBC, if they were being if they were serving the viewers well from a
Hmm.
marketing, from an investing standpoint, I feel like I feel like there would be more excitement in a down market,
Hmm.
because if you're an active investor and you're in the investing cycle,
Yeah.
um as the market's going down, everybody should be like on a roller coaster, we're going wee, right, and like just
Mm.
acquiring, because as the market's going down, every day you're possessing and acquiring more equities, you're getting it
Mhm.
on a discount from it was yesterday.
Right. Yeah, exactly. But the people who watch CNBC are the people with money. The people with money are seeing their accounts go
Established money.
down, and they're in the ratings business, not the investment business. They're in the entertainment business,
But
which
am
is
I am
okay.
I completely off on that, though?
No,
On that,
no, I think you're right.
I mean, to
Um,
middle America, who all of our viewers, all 19 of you, if you're not because I was late to investing, I definitely was, afraid of the markets, and thinking that all these people had this knowledge that I just didn't possess. And then I keep, after, like I said, after witnessing a couple cycles and then starting to get ramp up my investing, I'm like, now every time, and of course that's how I will look at it for the next 20 years while I'm in my investing years. Every time the market goes down, that's where I want to ramp up my acquisitions.
yeah, no, absolutely. But as we said, they're in the ratings business, and if there's only so much time, so many times you can come in and say, keep investing, stay the course. I mean, that'd be very boring programming, I think. But um,
Hopefully I made it look exciting.
you did, absolutely. I was locked in. I was tuned in. So there actually is. It's funny you should mention that. So a plug for an interview that I did a while ago. I had Eric Balchunas on, who is the ETF specialist for. It's probably not his official title, ETF lead head ETF analyst or whatever for Bloomberg, and he had come out with a book on on kind of that subject of boring investing through Vanguard and all that sort of stuff. And one of the things he talked about on his podcast for a lot of years were somebody should come up with an ETF that does what Jim Cramer recommends, and then one that does completely the opposite of what he recommends, either by, shorting the stocks that he's telling you to buy or to go long in. And that's actually out now. There's a short Jim Cramer ETF and a long.
I love it. How are they doing?
ETF. So they are. I don't know if they're launched yet or not. There's SJIM. I'll look that up. I remember there was a lot of talk when they first got registered, but I don't think they're trading yet. I didn't think it was going to happen because they.
I mean, people have, I'm sure, have done historical comparisons, right?
Yeah.
I wonder how that compares.
Yeah. So no, they're not trading yet, but they have been filed for registration. So there's SGEM, which is short Jim Cramer, and then there's LJIM, which is going to be long Jim Cramer.
Yeah.
So, anyways, the wacky world of ETFs, which is, the good news is if you really want to lock in and invest in a specific area, you can do that now without having to pick which individual stock is going to win in that sector, which I think is good for folks. Like if you had an idea that you thought cybersecurity was going to do really well in 2023, you could, buy that cybersecurity ETF or cloud computing or whatever you wanted to do and take a little micro bet on that, which I think is good. But there's been some wacky ETFs that have, they come out with these ideas and then they don't really gain traction. And then they end up closing the fund, which happens a lot. But
right.
Overall, most of the advancements in the ETF space, I think, have been good for folks. So, but
what do you think ChatGPT is going to do for investing?
Well, so I did experiment a little bit with that over our last episode, and I
did you ask it to make some
financial questions. I'm sorry, what?
Did you ask it to make some picks?
So I asked him, actually, I wanted to pick some kind of obscure mutual funds. And the first thing it answered was, this is not to be used for investment advice. And the first thing it said was basically your standard disclaimer. And then just kind of went through some facts on stuff. And I tried to just put in some different symbols and ask it some stock stuff. And I guess I'd be somewhat relieved in the fact that it didn't actually offer any sort of investment advice, and that it gave the disclaimers. I asked it what a 401k was, and the answer was kind of so-so. You could, it basically said it's a place where you could put away your money and it grows tax deferred, and then when you take it out, it's taxable, which is true, but it omitted kind of the Roth part, which works the opposite. So you had to, again, prompt it and say, well, what about the Roth 401k? And then it gave a good answer to that. But I think there's potential there, just like every other industry, to ask it really, sort of basic questions. But you're going to get that factual answer and not the peripheral stuff, which might factor in. So
the intellectual piece, probably, right? I mean,
yeah.
It is a bit verbose in the way that it kind of regurgitates information or assembles information.
Yeah. I got to say, overall, I was probably not as impressed as maybe some of the hype would lead me to, and maybe that was just the subject matter, but it's not as impressed maybe as I thought I was going to be. So, for what it's worth, how about you? When you asked us some stuff, what was your experience?
So yeah, I've been very impressed. My marketing team has been playing with it, having it draft some marketing copy for us, and we're finding it to be a pretty interesting thing. It is verbose, so when you ask it a question, it tends to be long-winded.
Okay.
And you can manipulate that. You can say, give me the question in less than 100 words. And
Right.
you can, and that's what I think is really fascinating about it, is that you can speak to it in real speak. And yes, its default response to you, again, maybe verbose, it may be long-winded, maybe off in its tact or its approach, but you can ask for a different angle if you frame your query in a way. You can have it change its tone. You can ask it to kind of come in from different dialects and age ranges, and you could say explain 401ks as if I were a 5-year-old, for example. Or you could say explain a 401k to me as if I'm a seasoned investor, and it would literally produce a different response. And that's, to me, really fascinating. Where we played with it, said, and said, write me a blog post, 1,000 words on the current state of cybersecurity, and it produced a meaningful output. And what was interesting, I've been talking about ChatGPT with a lot of people and some academics that and some friends who, the Luddites, I God bless them, but they just, the fear monger, that quick jump to fear anything that's new or not understood yet.
Yeah.
And to me, what it looks like is it's even the written word, to produce 1,000 words on anything, it's a laborious task.
Mhm.
Even if you can write 60 words per minute or type 60 words per minute, it's a laborious task.
Right.
And this tool eliminates the task. So imagine you're a home builder, for example, and you have the intellectual product is the knowledge of how to build the home, right?
Mhm.
And I don't know if how much you know about framing. I don't know anything about framing, but there's rafters and there's gussets and there's eaves and there's rakes and there's angles and there's toenails and there's sill plates and all these things, right? But you need to get the lumber off the truck over to the site. Chat GPT seems to me like the thing that gets the lumber to the site,
Mhm.
and maybe even will hold the board up for you. But like, the human is the person saying, this is how much we need. I need it over here. Hold it here while I nail it in. You know what I mean? I don't know if I'm drawing a good enough metaphor on that, but the human, and honestly, I can see to the point where, I mean, this is 2022, which, we're a quarter of the way through the new century, which kind of boggles the mind in a way too. But you can imagine, like, my kids, which is just not that far. They,
Sure.
if the technology is here, yes, the tool is going to replace human work, but so far technology has not replaced humans. It's only augmented and made everybody's lives better. Everybody. I mean, that's the bold statement of the day. Everybody's lives has been made better from technology and development compared to historical humans.
Right.
I mean, even if you're living in a tent in Tent City in Los Angeles, that is a nylon neoprene tent that is far more waterproof than the cow canvas that you would have put over a stick in the middle. You know what I mean? Like, it's like I know that's a bizarre link, but
Yeah.
the rising tide has lifted all the boats. Yes, there's still people, there's still the winners and the losers, but
Mhm.
anyways, I won't make the argument because I know it's a sensitive topic. But so I look at the Chat GPT, and it's like, the and I always use the job. They used to have gas lanterns in cities, and there used to be a light lantern. Like, a guy would there was a job where the guy would walk around city with, like, this torch, and he or she would light the street lights,
Right.
and then come around and turn them off, at the end of the day. And electricity eliminated his job. But with some retraining, and there's always that disruption, and yes, people are just uncomfortable, and there's loss that occurs, and that's I feel for all those people, but essentially the body of humans retrains and pivots. And so I look at ChatGPT and it's like, yeah, the 80% of the words for the 1,000-word blog post no longer needs, because I have a team of copywriters that I pay a lot of money to fill words on a page. And now I'm looking at them overnight saying your work output is expected to change.
Mm-hmm.
I mean, that happened overnight.
Sure. Right. And you hope that it lets them, ultimately all this stuff, you hope it makes the routine, mundane part of people's job, so that they can focus more on the creative stuff, which is what you want to do.
The
In
intellectual
your home
process.
building example, you might already have architecturally the house built in your brain, but you might want to go to something like a Chat GPT and say, all right, here's my architectural designs. Do you have any suggestions? Something like that. And they might be able to come up with something a little better, a little more creative, but it doesn't mean you should ask Chat GPT, how do I build a house, and follow the instructions exactly. Not quite ready for that yet. Although the programming stuff is interesting. I don't know if you've seen any videos or asked it for any code. That stuff is actually pretty good. I think that might be the biggest advancement. But
Do you
yeah,
know?
yeah,
Sorry, go ahead.
yeah. I mean, I think that's the whole idea, is that it lets people focus on the more creative stuff. Like, instead of saying, all right, I got to do this basic article on what is a 401k, because the person writing it already knows what the 401k is. They're just filling out a paper to,
Exactly correct.
deliver to 30 people in the room. So you want them to be able to check that box and say it's done, get it, and say, okay, what type of graphics can I use? What's the better font? How do I better communicate this with the 30 people in the room?
Exactly.
How
I
do I
mean,
turn this into a YouTube script? How do I do all these different things rather than hunting and pecking for 1,000 words?
exactly. And listen, there's a big fear in academia that students are going to take a shortcut to a degree with this. I mean, there's reports that they already sent Chat GPT to college, and he or she's a really good C student
Mhm.
without any manipulation of its output.
Yeah.
And I think I'm just, man, it frustrates me because it lacks the creative, it lacks to be afraid of this, to say students are going to take the shortcut through academia.
Mhm.
I think is to just, again, it's
Yeah,
not
that's lame.
well, I mean, think about it. It's like, again, it's like calculators. I mean, my God, like we give small children and children calculators, and yes, we teach them long division. There will be the classes where you learn how to write 1,000-word essay, but once you've checked that box and say, okay, this is what 1,000-word essay is, we lock that skill into the annals of history and the knowledge base, and
Mhm.
then we propel the learner forward by saying, produce a dissertation or an essay on this subject matter. They may use a calculator. It's just a word calculator.
Right.
Use the word
Yeah.
calculator to spit the 1,000 words out. But the
Yeah.
product that the student is responsible for is the words themselves. So the framing of the message, and the quality of the message, and the fact checking of the message. I mean, you could still get the calculator to spit out an answer, but really the their operator's inputs are responsible for the quality of the output.
Mhm.
Right?
Sure.
Garbage in,
Yeah.
garbage out.
And
So
it'll be a rise to the critical thinker, or the fact checker, or that type of stuff, to say, all right, I'm the one guy in the room that realized that calculator spit out the wrong answer, and here's why. So it's gonna trigger that in people to sort of question things.
now,
Um,
now let me make another ad here. Are you
yeah.
familiar with the concept of the singularity?
Uh, yeah. Walk me through it.
So again, this is my totally, I don't have any information. This is just going off my understanding of the singularity. It's when a, it's when the conclusion of the total, I don't know if it's like biology merging with technology, or it's I don't even know what the singularity is in a detailed description, but I can ask ChatGPT. Actually, let me just pull this up. What is the singularity? I'm going to make a point, so stay with me for a second.
All right, I'm with you.
I don't know if I'm still alive. The singularity, and this is real time. I'm going to read this. The singularity is a hypothetical future point in time at which technological growth will accelerate so rapidly that humanity will fundamentally change. That's just the first sentence. The thing is still reading on. So to me, this looks like and feels like some sort of entry point into the singularity. Like the technology. I mean, look at the last 100 years. You and I straddled the last 100 years, right? I mean, your parents were born, I would guess, somewhere in the 20s or 30s, right?
Yeah. 40s.
So so certainly your grandparents remember outhouses and not everybody having electricity, maybe, or certainly not everybody having two cars in the garage or a television in the house. So we are close enough to kind of what feels like pre-modern day, like we are close enough to pre-modern day, and yet in the last 100 years, I would say even in the last 70 years, there's been this flywheel of technological growth. And I don't mean to be a fanboy about technology, but I am the technologist here, that this tool overnight last week seems like the flywheel just spun quite a bit faster. You know what I mean? Like even,
yeah, I see what you're saying.
I mean, even to the, go ahead.
Yeah, it's each incremental shift. So if you took the last 100 years and broke it down in 10 different decades, each decade on top of another accelerates technology faster than the one
Exactly my
before.
point.
Sometimes it doesn't feel like it when you're living in it. You say, wow, they went from Wright brothers to landing on the moon in 60 years, and it's like mind blowing that could happen in somebody's lifetime. But
That is mind blowing.
It is.
I mean, that is
all right. Well, what have we done in the 60 years since we landed on the moon? We've barely been back. We haven't, but that's not the case. We've had far more technological advances in the last 50 than the previous 50, or even the last 5 and the 5 before that. But it's just when you're living in it, it doesn't quite feel like it.
And you and I have been living in it in what I would say modern technological era. That's been basically defined by our lives. The transistor was invented or popularized in our parents' lives, and for most of their lives, the transistor has been getting smaller and smaller. And the transistor could be analogous to dendrite and synapse, nerve ending in our brain. And this ChatGPT is basically a what do they call it? A neural network of it's a speech network. You know what I mean?
Right.
Of course, I'm not smart enough to even articulate what I'm trying to express, but it just feels like the flywheel towards the singularity just got an extra push, but a big one.
Yeah.
So it even the code. So you mentioned the code, right? The software, the ChatGPT can write programming language.
Yeah.
So you can ask for an output in a certain programming language, and it will write a program for you. Again, the examples that are shown on YouTube and in the news say that there's an asterisk there. It still requires the human to tweak and manipulate the output. Control. Manipulate the inputs to get the desired output. But again, like I'm saying, with the 1,000-word or 2,000-word essay, it gets you 80% of the way there. So it's just fascinating. I don't mean to get overly excited about it, but from where I'm sitting, my copywriter, instead of producing 1 or 2 blogs a week,
Hmm.
it can now produce 5 a day. That is real.
Yeah.
That
Yeah.
is real, and that happened overnight.
Yeah. No, I could see that. Yeah, I mean, I've used some AI writing tools before, so I guess maybe it's not that huge a leap for me. And I think it sort of depends on your subject matter too. So just for fun, I put in what is Disney stock, um, and the response I got is fine, but it tells me nothing. So the first sentence is Disney is a media entertainment company that is primarily known for film, television franchises, animated films, live action films, and television series. Like, okay, that's good. Then the next sentence, Disney is a publicly traded company, which means it's owned by shareholders who hold stock in the company. It's like, okay, that's okay. But that's a sentence they could push out for any publicly traded company. And then the rest of it is, pretty formulaic.
How about this? Ready? Smile,
Yeah,
smile, and look at the camera for a second.
yeah,
Nathan, get ready for this. Okay, this is going to be a
yeah,
clean cut.
yeah,
Hang on. This is a cut. I want to get this in.
yeah.
Welcome to Finance and Technology Insights, a podcast dedicated to exploring the intersection of finance and technology. In each episode, we invite industry experts to share their insights and experiences on the latest trends and developments in the world of finance and technology. Our hosts, Brian Williams and Eric Buhrendorf, bring a wealth of knowledge and experience to the table, having worked in the financial and tech industries for many years. Join us as we delve into the exciting and ever-evolving world of fintech. Okay.
All right, that's good. What was your input?
Write me a quick opening to Finance and Technology Insights by Brian Williams and Eric Buhrendorf. That was untouched. So
Okay.
obviously the context and the voice, but if I was a third party,
Yeah.
that would be completely accurate. If Nathan were to record that intro, that would have been completely accurate, minus the guest piece.
Yeah.
Although we've talked about having guests, and maybe it's read that, maybe it's doing a voice to text. I don't know if we're being transcoded. Is it
Yeah,
our
YouTube does it. Yeah.
Yeah? So I mean, we've talked about having guests on.
Mhm.
You know,
Yeah. Yeah. Yeah, it's not bad. Definitely has its place. I got
how about this?
yeah. Good.
Write me a quick opening for Finance and Technology Insights by Brian Williams and Eric Buhrendorf from Eric's point of view. Spelled technology wrong. Hang on, let me just spell check this here. Hi, my name is Eric Buhrendorf, and I'm one of the hosts of Finance and Technology Insights, a podcast dedicated to exploring the intersection of finance and technology. I have a background in both industries and am excited to share my insights and experience with our listeners. In each episode, we invite experts to join us and discuss the latest trends and developments in the world of fintech. Whether you're a finance professional looking to stay up to date on the latest innovations or simply interested in how technology is transforming the financial world, our podcast is something for everyone. So join me and my co-host Brian Williams as we delve into the exciting and constantly evolving world of finance and technology.
There you go. That's something.
That's
A lot of overlap with the original one, though. So I
Yeah,
think
but I mean, in a vacuum, if that
yeah.
that
Yeah,
had that been my input,
that's not bad. Yeah.
it's really cool. And I guess maybe uh, starry eyed because I've AI's been a buzzword for, well, definitely for the last 60 years, but
Yeah.
AI has ramped up in the last 5 to 10 years as the heat around AI has kind of heated up from a
Mhm.
buzzword standpoint,
Yeah.
and I really don't. I'm not an early adopter.
Mhm.
I'm a technologist. I'm not a Luddite, but I'm not an early adopter. Does, does that
Well, what happens is a lot of these terms get overused and misapplied. And I remember like when everything was cloud, right? Remember when everything's stored in
exactly
the cloud? And it used to just bug me. I'm like, yeah, you stored stuff on a remote server 30 years ago. Wow, how is
perfect
that any
example?
and everything was cloud. Everything was cloud. It's like,
10 years ago, cloud was
Oh my
hot, hot, hot.
God.
And I'm like, you guys, it's just the internet. The cloud
Yeah,
just means the
I
internet.
know. Yeah, great.
Perfect example.
Yeah.
So
Like, yeah,
I
remember doing like FTP addresses like on
totally,
my dad's computer 30 years ago. Like that was cloud. But yeah, so a bit, and then everything is like, everything is AI. Anything that sort of helps you. It's like, okay, well, spell check on your word is AI. I mean, that's just so that yeah. The term does get all these terms do get kind of overused
but
because everybody wants to latch onto it because it's like
but
the
to
newest.
my point, I'm like the Apple of technologists. Apple is never the first out of the gate. They wait for it to be refined or whatever, and then they jump. Then they enter the market with a solid product. Like that's how I view
Yeah.
technology myself. Is AI. Well, let's talk about the cloud real quick. And I know we're running long. We'll call it in a minute. But when the cloud 10 years ago was the hot buzzword, I wasn't hot on it because there was no reusable, there was no real material value in that moment. As somebody was getting excitable about the term cloud, like how do we, Eric, I'd had firm owners, how do we get the cloud? How do we use the cloud? I'm like, yeah, you're already using the cloud. You're already
Yeah.
your email is in the cloud. We remember we migrated your email off your own Exchange server in your closet, and we put that up
Mhm.
in the cloud. So you're already using the cloud. We're going to use these technologies as they're usable and beneficial to us. Now I'm making almost every single day, I feel like I'm telling some current or future client that cloud and web are two different things, and
Mhm.
we're all in on web software.
Mhm.
So there's software now that I run my entire business now in a web browser. In fact, I
Right.
was just talking to an attorney, trying to train him on some of his systems and tools, and I was showing him how he can make a phone call using his office phone in his web browser, and his mind blew. He's like, I don't
Yeah. Crazy.
understand.
Yeah.
He literally said, I don't. And he was, I think the guy was 60, he got to be in his 60s, like a real smart person, right?
Mhm.
And I showed him how to make a phone call from his Ring Central browser plugin, and he just didn't understand. He's like, "How are you doing that?"
I know.
and
I know.
and
It's crazy.
y- you know,
Technology and stuff that we take for granted. And probably said this before, but my wife yells at me all the time because I assume that everybody knows everything, and sometimes I'm like blown away when somebody knows, like even the idea of just like clicking a phone number in your CRM and having the phone dial.
yeah,
Like,
that's
that's
what I
still
did. That's
foreign
what
to
I
so
showed
many
him.
people. It's like, how, crazy.
Yeah, I'll probably do another video on that alone. But what was my point? Yeah. So, anyways, I am eager and excitable about this Chat GPT, and this is the last thing I'll say about it because it is it is free.
Yeah.
And it is now. It is right
Right.
here. Anybody can go to chat.openai.com, create a free account,
Okay.
and start playing with this. And I remember when ChatGPT came out like 6 months ago, they had a previous version. I guess this is ChatGPT version 3 or something. And I
Yeah.
did take a quick peek at it a couple versions ago. I think maybe even you and I covered it briefly. And I was nonplussed. Let's just say
Mm.
that. But it's sitting right here in front of me. Like I can ask it anything.
Yeah.
Um, and
Yeah, I guess it depends on the input and what you're looking for. This is just kind of comical, and I'll close out with this because it's 10. And so as of December 20th, 2022, the current stock price for Disney is $XXX.XX per share.
so it doesn't
That's
want to
literally
give
what
you,
it
doesn't
came
want to
back
give you
with.
the value probably, right?
Yeah. And
Yeah.
then it
So
said, is it important to note that the stock market can be volatile and the value of an individual stock may fluctuate significantly over time? If you're considering investing in Disney or any other company, it is recommended that you consult with a financial advisor and carefully research the company before making an investment decision. It's like, okay. Well, so what I need to do is like ask it about 5 or 6 different stocks and see if it's the same response because 90% of what they gave me for Disney could be used for every stock, obviously. So that'll be, I'll at some point play around with that. But but we'll see how that.
I just
evolves.
asked it, what is CNBC reporting as Disney's current stock price at this time? And the first sentence, I'm sorry, but I'm not able to give you real-time information on stocks. My knowledge was compiled prior to September 2021. So that's interesting.
Yeah.
All right. Well, hey, we'll talk more about. I think this might be there might be more meat on this bone because I'm this isn't the last I'm going to talk about it for sure.
Yeah.
And I know we're running long. So great show, buddy. We'll see you next week.
All right. Sounds good. Thank you for joining us on Finance and Technology Insights. I'm Brian Williams, one of the hosts of the show, and it has been a pleasure sharing my insights and experiences with you on the latest trends and developments in the world of finance and technology. We hope that you enjoyed the podcast and found it informative. If you have any feedback or suggestions for future episodes, we'd love to hear from you. And be sure to tune in next time as we continue to explore the exciting world of fintech. Thank you for listening.